What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, before I even get started, I'm going to go ahead and throw this up here so you guys have a little something to look at as I am giving the spiel and reflecting back on this past week. Now, looking over this past week, I've been talking about this for a while now, that we were really waiting for this week to get kicked off. This week is actually a lot bigger than what I even could essentially dream of what was going to happen. But I knew this week would be essentially the turning point, because of the events that were going to lead up after Powell was going to testify. So last week, not this past week, but the week before that, we essentially had a no news week, no event week. We were coming off of big earnings. We were just really kind of waiting for Powell and waiting for the next non-farms and waiting for the next core. And so coming into this week, I was expecting it to be kicked off with Powell, and it sure did, because essentially what happened is on Tuesday, you had Powell come in and he was testifying in front of the Senate. And boy, did he bring some sticker shock value. He essentially said that they had made a mistake, essentially saying that um, inflation was running a lot hotter than anticipated, and that perhaps, essentially, perhaps a 25-point basis move wasn't enough. They should have potentially came in at a 50-point basis move. As we all know, the last monetary policy PPI came in hot, and then essentially every report after that started coming in very hot. And so that kicked us off on Tuesday. There was a Senator John Kennedy, I believe was his name, senator from Louisiana, and he brought a very good point over this past week. He essentially said, given historical reference at the rate at which Powell is essentially increasing rates, which Powell stated that he's going to continue to increase rates, very dependent on data. So we have to be flexible. But he said, given the historical reference, that essentially moving forward, if we continue at the rate in which Powell is raising rates, that we would essentially hit a 10.6 unemployment rate by the end of the year. And now, just to put that in perspective, we are just sitting at a 3.5 right now, and there's a lot of layoffs still coming. They were only projecting about 1 million layoffs, and by the end of the year. And now we're really starting to see what the damage of these rate increases do. But it doesn't just end there. After saying that statement, essentially, Powell was pretty much for anything that needed to be done. He didn't care what was going on with the dollar. He didn't care essentially about anything else. But Kennedy had made that comment because he essentially said if Powell needed help, that Congress needed to step in. But he didn't want to get involved with policy. That's not his realm. So Congress needs to help out the best that they can. And if Congress doesn't help, it's up to Powell. And the only tool Powell has to battle inflation is interest rates in trying to kill demand. And so that being said, that started off Tuesday. And then Wednesday, we had him in the House. He reiterated a lot of the same stuff, didn't have as much weight. Again, he brought sticker shock on Tuesday. He didn't need it for Wednesday. The Beige Book reiterated essentially what Powell had been stating this whole time, or since Tuesday. And then Thursday, essentially overnight on Thursday, there was a bank, Silicon Valley Bank. Now, there's been a lot of issues with defaults and just the way things are going. I've talked about this a lot as far as the automotive loans, mortgage loans. There's a lot of things that people are starting to default on, even credit cards. People are being delinquent on a lot of these bills as of right now. And we know that because they are charging their credit card for basic necessities, as they are also trying to pay for rent. And so, with all that being said, Silicon Valley Bank, Thursday morning, it essentially announced that they had lost, I think it was like $1.25 billion. And what was going on was, before 2021 or before 2022, I believe they were sitting around 11. They bought a bunch of bonds, and this is not typical of a normal bank, but they essentially bought a lot of bonds, roughly over 50% of what their holdings were. And it's not typical for normal banks to do that, but considering that they are not your typical bank, as they essentially are obviously Silicon Valley, so they do a lot of startups and working out there with entrepreneurs, and so liquidity isn't very easy for them. And so they essentially try to jump in on bonds, and just because of the current environment, essentially it's a 10-year bond, I believe. And so they really kind of shot themselves in the foot. But nonetheless, what ended up happening is, come to find out on Friday, that the FDIC essentially closed them out. And they said that was the first time that's happened since 2008. And they closed the doors on Friday. They shut everything essentially down on Friday. And they went from a I think it's $270 stock down to like a $40 stock within a matter of 24 hours. Now, some people could potentially be calling it our new Enron for this decade. I mean, we will see, but nonetheless, things are not looking good. The bank started doing that on Thursday, or essentially Silicon Valley Bank was doing that. Started on Thursday, and then later in the afternoon, people start getting worried and concerned about, well, what if this happens to other banks? And so we started getting a massive sell-off towards the back half of Thursday, in anticipation that something like this would occur with another bank, particular JP Morgan, Bank of America. Now, there is bank stress tests, and they're done quite frequently. I believe they're done almost quarterly. But ultimately, the last one we had, they were sitting at an unemployment rate. I believe it was around, I want to say it was around just over 6% for unemployment rate. So they tried to do worst case scenarios. There were some big name banks that didn't do very good. And there's a lot of the big names out there that did okay. Now the question here is I see some other different charts as well that say that JPM may be a lot more underwater than people think. Same with Bank of America. And so the concern being Thursday and Friday is something very odd also happened around this time. The dollar stopped pushing up as the market was selling. And the odds going into Thursday for a 50-point basis move were increased up to about 75% chance we were having a 50-point basis move coming into monetary policy. And then the dollar stopped moving and started actually selling off a little bit as the market was selling. And the odds for a 25-point basis move came screaming up. Now, if you haven't noticed, just for me talking about it, hopefully I've translated that well for you. But what is occurring here is that the Fed is in a very bad spot. If they raise rates, you run a very high chance that some of these other banks are essentially going to get margin called and go bankrupt. And with the way things are, essentially what happened on Thursday, they didn't want, if people wouldn't have pulled their money out of essentially Silicon Valley Bank, things would have been okay. But there was this rush to pull things out. There was a lot of whispers about it Thursday night. People were pulling all their money out of there. There's some big money that was in that particular bank was holding, obviously being Silicon Valley. And so, with that being said, what had ended up happening is there was what could be considered a bank rush on Friday, and banks took a heavy hit. Yes, it did bounce, but they took a heavy hit Friday morning. And then again, big concerning thing. Okay, well, the next step is core. If the core is going to come in hot, like I anticipated to come in, and like Powell has stated, inflation is getting hotter than anticipated. What are the Fed going to do? Are they going to risk it, continue to increase rates, and potentially cause some of these banks to essentially default? And so, with that being said, essentially what's going on is you have essentially gotten a black swan event. This is something that really wasn't anticipated. We knew it was happening in the background. But one thing even I wasn't really considering was the fact, during the pandemic, the bank didn't have to hold assets. Essentially, the Fed were essentially backing them up if anything was to happen. Now, this could be going forward as well. Maybe the Fed will step in and back the banks if they needed to start raising rates. But again, then you're starting to also turn up inflation at the same time, trying to help the banks. And so the situation that we're getting in is a very, 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 very nasty situation. It's a double-edged sword. If you're not going to continue to increase rates, inflation could just run away, and you just don't want inflation to run away. And with that being said, on the same token, if you start laying on rates, well, then you run the risk of other banks, bigger banks, defaulting. And then not only that, okay, well, then what's the Fed going to do? The Fed's going to have to step in and start printing money to buy these bonds and securities. Essentially, they're these assets that these banks hold to keep them afloat. But then what is that going to do with inflation? And so it's this nasty loop that we're falling into in a very big black swan event that happens after a 40% printing of money, the money supply. We didn't know what exactly we were going to get from it. We've seen a lot of things that are occurring, and this, essentially the backbone of everything, is at risk. Not to say we're always aware that this thing was going on. This is why they have to hold so many assets to be able to lend out. But again, if anything happens like SVB and people start pulling all their money out, that could be a major, major issue for everybody. And who knows where we go from there at that point. So that was just this past week. Again, there's a lot to digest. I wasn't expecting all that. I thought it would have been pretty clear cut, and we were just going to go for, have the Powell show, and then essentially have the Nonfarms, and then go into core, or it's going to be more than essentially anticipated. At least that's what I'm thinking. And also to lead it off is the Nonfarms on Friday. And so projecting into Friday, I was thinking, okay, well, the non-farm is going to show it being hot, right? It's going to be a lot more than forecasted because of the fact that people are working multiple jobs, that just to stay above the rate of inflation. And inflation is still very high at 6.4. And so it did just exactly that. It came in at 311,000 as opposed to 210,000 expected. I said if it was anything over that, it was going to be bad. So the good here is actually bad news, because that means that essentially the Fed could raise rates at 50, 75. It didn't matter. They're still showing a lot of growth in employment. And this is what's very confusing, because that's not really what's going on if people are working multiple jobs just to keep up with the rate of inflation. And a lot of those jobs are in services. There was a massive push in services for these jobs, and that's where a lot of the jobs have been. They haven't been in a lot of um, very well high paying, essentially jobs or occupations was the word I'm looking for there. But nonetheless, the jobs lining up as expected. That's not a good thing for core. Now we're coming in, rolling into this next week. We have core on Tuesday at 7:30 Eastern Standard Time. We are projecting a 6 point. We're forecasting a 6.2. We're coming off a 6.4 with only a 25-point basis move. I see this thing either being in the high sixes or back in the sevens on Tuesday. And if that aligns with everything else that's going on with the fear, because now you have new fear about banks in essentially in the market. And then if you get a really high core, people are going to be concerned. Well, inflation is going back up. The banks can't stand any more high interest rates. What are we going to do? And that's the ultimate question. What are we going to do at that point? And then we do have PPI on Wednesday, but again, that's definitely not going to be a good thing. This is just going to add more fuel to the fire into going into monetary policy the following week. Um, Now, as you can see, cores on the 14th, monetary policies on the 22nd. This is also something you need to keep in mind is the next monetary policy is until June. So you're going to get 2 months of after the 22nd where you're not going to get any kind of monetary policy. Are they going to come in hitting hard because they know inflation is starting to run? In my opinion, if this gets hot, I think no matter what happens, even if inflation is hot on Tuesday, and there's the concern with the banks, I think Powell will still come at least at a 50-point basis move, if not a 75. If it's going to be a 75, in my opinion, it would have to be that inflation would have to be extremely high, like well into the sevens. I think at that point for them to consider that, just to try to make up for the fact that they only did a 25-point basis move. I think that would be something that would be considered that has to be done. And so this week, again, very pivotal week in the front half of the week until Wednesday. Then after that, we're going to essentially wait. We're going to digest whatever just happened after the core, which can be some really bad stuff. And then who knows what happens with the banks over the weekend. You have to remember that's our new black swan is now we have the banks. Which banks are going to start going under? If we hear rumors or anything about banks, the next bank to fold, that is going to be a huge, huge problem. The banks hold up the market. If the banks start selling off heavily, that is going to add some major, major sell pressure to the downside. And then, as you can see, I'm not doing earnings this week. Again, earnings, we're kind of done with earnings. We're right after monetary policy. We're going to start rolling into bank earnings, which are going to be extremely important in the next quarter. As we've seen massive, massive layoffs in banks and continuing to get massive layoffs. But not only that, you're going to be also dealing with new earnings and with big tech right around the corner. So you're going to get all Q1 results. We've already seen Tesla slash prices. I believe it was twice just in this quarter to try to keep up with selling vehicles. And so mid-size cars and luxury cars have really been taking a hit. And something we've talked about up to this point. And so it'll be interesting to see what is essentially recorded here for Q1 earnings, which again was right after monetary policy. So as you can see, since leading with Powell, there's huge series of events that are just unfolding and continuing to get worse because the reality of the situation is now being exposed out there, right? They can only refine so many reports and try to hide it to try to buy time, but now it's catching up. And now it's a bigger problem now than it was months ago. And something we could see this week, there's a lot priced in this week. And if you watch my channel at all, I do these each and every week. I essentially have the expected move, and it would essentially tell you if there's an event going on during that week. Obviously, I go over events a lot on here so you kind of understand why these things have bumped up. But you find where the average is on these options, and then they help you determine really what's going to happen and really determine if you want to be playing options at all that week. Because if it's away from um, the normal average expected move during that week, it's going to be very hard for you to make any money on those options. And so you need to look for other alternative options, protect perhaps a different industry, or just not play, or play equities or something like that, or futures, whatever the case is. But nonetheless, SPX is normally around 60 points expected a week. Now we're up to 120. Obviously, it's going to be a big week. We have core. It's going to be a huge week. Plus, we got the banks. Tesla still sitting at 13. It's kind of been sitting around 13 since it had this big pump. BA up at 10. BA normally sits around 7. And this is what's really crazy is JPM is at 7, and it is like almost dead set at like 3. It hardly moves from 3. It may go 3 to 4, and that's about it. And now you got a 7 in the banks. As I said, got a black swan event. Of course, the banks are potentially going to have a huge move that they are trying to price in. NVDA, just like Tesla, it's had a huge move. They're expecting another big, huge move on top of a big week. So they're trying to price a lot in. And so people can't make a lot of money off of options. So this is why we keep that up there. But with that being said, we can go ahead and pull this down and start looking at some charts. So again, we know Tuesday is going to be a huge week. We have to see how we open up on Monday morning. Again, it's to be very critical considering what's happened on with the banks. There's a lot of events. I'm recording this Friday evening, so there's a lot of events that can occur over the weekend that could potentially influence what happens and how we open up on Monday. And again, could be really bad. And if we get a bad core, again, now you have a huge conflict on, okay, well, if Powell, knowing he doesn't have another monetary policy until June, will he come in at a 50-point basis move, a 75-point basis move, all dependent on that core? If that core starts running hot again, that's going to be a huge issue, because that means he is bound and determined to make sure inflation doesn't run away. And so he will chase inflation. He will put a 50 or 75-point basis move. Again, when monetary policy comes out as well, you have to keep in mind that they're going to have projections of what they're looking to do in the next couple months, in the next upcoming monetary policies. And so you're going to get a lot of data on March 22nd. And again, it's going to cover, we got that huge gap in April. We'll have another core, but we'll have that gap before the next monetary policy. So April is going to be kind of the cleanup month after whatever is going to be the fallout that's going to happen here. So just be mindful of that. It's normally a pretty strong month in a normal cycle, which I could see us start to perhaps stabilize after what could potentially be happening here. But we need to let this month play out. And again, there's some big things that are occurring right now that are occurring that in the next 2 weeks could make this thing extremely nasty. So again, we will wait and we will see. But as of right now, technical wise, as you can see, we've really just buttered ever since Thursday. We tried to rip up, and then the bank information just came out. This move, to be honest, just this small move, this essentially from 39.86 was the morning move up to about 40.16. Then we got the bank information and we just dived. And then straight coming into today, we pushed a little and then just straight dived again. Banks, again, this is to show you the weight of the banks. This is a pure bank move right here. Those two candles right there, that's the power of what banks have. And so nonetheless, we have to see. I talked about 3,800. I said we would be here. It's funny, I said we would be here going right into core, and that's pretty much where we're at. We're not far away from it. We're about 60 points away from it. Maybe Monday we continue, or maybe Monday we open up at 3,800. It could be a strong possibility. There's really no incentive to push up at this point, especially when you got fear about banks coming into this week. So again, we want to see how that does open. again, if we get a bad core, this thing's going to break, and we're heading, in my opinion, for 3,600. So we can potentially make a new low. And now you got a black swan. If something more comes of that, if another big bank, the last thing you want is another big bank to come out and say that they're losing tons of money, essentially that they get margin called, they're potentially going bankrupt, all these other different things, right? These different things or could add to more fuel to the downside to where this thing just could potentially limit down. And so you have to understand that is with this new black swan, if it doesn't limit down over the weekend, right now you're just getting the digestion. This thing just happened. So you just had a little bit of digestion today, but you're going to have more digestion over the weekend. People are going to start looking at all the banks. Well, is there some other thing that could potentially happen here? You're going to get some news. You're going to get all kinds of information, but we are coming into a Fed blackout period. So you won't have the Fed at all this week. So it'll be interesting to see. Nonetheless, this is all building steam into the core. So the core is going to potentially be the death blow to say that this wasn't, because the bank black swan event essentially started that death blow. And now you're going to start getting, again, another big potential thing. Again, if it's really hot, that's a problem, because now we were anticipating that in a sense because sticker shot Tuesday with Powell, but now we have banks, and potentially if rates continue to get increased, we might lose some of these bigger, well-known banks out there because of the rate increases and which they are, and which they have to borrow from each other. Ultimately, you have to understand that's what these rates are, is essentially the interest rate they have to pay to borrow from other banks. And so, again, big problem could be potentially happening here. So it is already occurring. So it's not saying potentially anymore. It is occurring. It's just, are they going to all start offloading at one point and then just completely put this thing in the ground? So again, we'll see if we do manage to somehow get back above the 3,900. I just don't really see that happening. Like, we have a black swan event. Maybe we can push back up to the 3,900 for a retest and then drop. But I'm really watching between 38 and 39. Again, big range on the index, and you have to play big ranges. Obviously, the market's trying to price in a 112 point move coming into this week. So even if you took it from the bottom and said, what if we just sold off 112 points? All right. So you're looking roughly, we could end up finishing the week roughly around 3,700. Strong possibility. Again, if it is bad core, I can easily see us headed way 3,700 by the end of the week. It's a very strong possibility with what is currently going on if we don't start limiting down with some bad information that also occurs from the banks. So that's what I got on there. The dollar, this is something I was talking about. This is what is really weird. Again, you don't really want to be seeing this. If we were just in a normal bad situation, it looks like the dollar is just is retracing. Obviously, it looked like it was getting ready to break out. But the problem is, again, that if we're only doing a 25-point basis move, it's not going to give the dollar strength. But you have to understand why. Some may take that as a good sign. That's great. We're not raising interest rates, but the same token, it's not good because inflation is going to start running away. And then you're going to start paying more for all the things that you already pay more for. And even though the interest rates are, they're one and the same, they're not great because you're not allowed to borrow money. It's hard to borrow money when interest rates are high, but it doesn't stop what is currently going on with the inflation that is going on in your supermarket, for energy, for rent, and all those things. And so, would you rather have the basic necessities that you're already struggling to pay go up even more, or would you rather have it's either the basic necessities to eat and shelter yourself, or essentially to go out and buy something that you don't need, right? And so, to make that as simple as possible, that's essentially where that's going. But nonetheless, so that's what kind of killed off the dollar because of the 25-point basis move. Again, we'll have to see if he says 50, this thing's going to rocket. On the same token, everybody's going to be grinding, essentially grimacing over what could potentially happen for the banks. So we'll see there. Again, they're projecting by September to be at 5.5 to 5.75 by September. And so they're still expecting these rate hikes essentially no matter what. So again, we'll get better projections and stuff come the March 22nd deadline. So the dollar, what to watch. Bitcoin finally took the plunge. Again, this thing is going to come way down. We'll make a new low. I'm guaranteeing almost that again, not financial advice, but I'm guaranteeing almost that we're going to make a new low. We have a black swan, and this thing is not looking pretty. Not at all. And we'll reach that road when we hit there on Tuesday morning, but it could be a very, 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 very bloody day if inflation goes back over 7. So Tesla, again, one's of the ones I'm really watching coming into this. I said around 140. Again, this thing might hold better now because of the current situation if banks and everything fold. But we've noticed there's a very delayed reaction with tech when it comes to financials and to value. Financials and value have essentially been leading the market in the direction, and then tech follows. So you may get a lag reaction where you have both value and financials selling really heavy this week, and then you slowly get the tech rollover, and tech finally starts rolling over, starts really selling. I think it'd be a very strong possibility at that point. We'll see where the momentum's like. It could break 140. We might see lower than 100 at that point. So just trying to be mindful of that and see where that does lead. NVIDIA, same thing. NVIDIA needs to break essentially the 125 mark. Break that, you got a huge drop down to 209, and then breaks that. It's got the huge dump, in my opinion, to roughly around 140. So those are the two safe havens for tech that I think are really going to give, and that's why I've really added NVIDIA on here. Those are two of the big ones I want to take advantage of on this dip going into the next earnings cycle. Again, I don't think they're going to do great on the next earnings cycle. And you have to let this thing play out because the dump this week and in the next week, I think more so we're going to get the bigger dump this week. And then next week, we're going to get the monetary policy and things going on. It could lead to another potential bigger dump, but I think your biggest dump is going to come from potentially this week in the core, especially if the core is really high. PPI is really high. It's definitely not going to be a good sign, and it's going to lead to the Fed having to do 50 points because they don't have much of an option. And then if something happens with the banks, they'll have to step in and actually do something. It could be a cat dog, a whole cat dog thing going on there. That's just not going to help. It doesn't matter. Whatever you try to do is just not helping. And so we'll see if we cross that road, but we'll get our answer very shortly is essentially what I'm trying to say. So BA, again, finally showing weakness. It tried to rip back up and sold back off, retest. BA, let's see if you can hold 188. If that breaks, it could come down quite a bit. But it does have a better support than some of these other ones until it gets roughly until that 172. If it does break that, then you got a much bigger drop down to the 148. So watching that on BA. JPM, this is what I talked about. That news came out and just absolutely tore everything up. Now, come Monday, you want this thing to be holding at least 129. If it's not, that's definitely a bad sign for the banks. You're going to feel this huge gap run right here. So so I'm saying this week could be really nasty because it could fill this gap, and if it fills a gap, that's going to add a lot of sell pressure to the market in general. Could see us roughly around the 118 by the end of the week, if not lower than that. Again, if that core is really high, that's not going to matter. And then if there's any other black swan events that occur over the weekend or next week, and concerns about JPM not, and potentially being margin called and essentially defaulting, this whole thing could end up really, really nasty and a lot worse than I expected. I thought maybe 32. I was really trying to look for a reason. I was talking about a black swan event needed to happen for the 3200 to hit, and I think we have our black swan. That's not saying you have multiple other black swans that can occur at the same time as well. Is it all going to unfold right now? The next week or two could probably really tell us. But we wait and we see how we open up during the day. Golden Sachs finally broke, selling off huge. Needs to hold 320. If not, it's going to break down into the 293. Bank of America, again, huge sell off, hit support. It did bounce. Question is, it breaks 29. It's going to be making a new low. So, again, banks will lead the way, value will follow, and so will tech. Tech has a bit of a lag, but tech will get there as well. So, but that is pretty much what I had. This is a long video and much needed because there's a lot going on, and you have to be aware that this week is going to be huge, maybe even more so than monetary policy. Now, monetary policy will have its own weight in itself. Again, in projections, not only does the policy come out, whatever it does, but again, it's highly waiting to see what comes of the core. It does have a very strong jobs report, which I said is not a good thing for a 50-point basis move. Any good news in the jobs means more bad news. So that would definitely be negative news. And considering that we came well over, that's just showing signs of growth that the market can take it when in fact they can't. The banks can't take it, and that's the concern. And so we will wait and see what happens there. But if you have made it this far, I do appreciate you. Go ahead and drop your comments with your thoughts and opinions about what's currently going on in the markets. Remember to drop a thumbs up. And until next time, I'll see you guys later.